All right, good morning, guys. What is today? Tuesday? Man, I'm lost in the week already. How's everybody doing today? 14 of you in here. Good morning, Bobby T. Hope you're doing all right. Guys, I'm excited to be here today. Good morning, Jeff, D, Zeba. Great to see you guys. Hope everybody's doing well. Hope you guys are ready to learn. Simple is better, right? Vittorio, nice to see you. Gary, David B. Man, we got all the cool kids on the bus today. Um, simplicity. I want you guys to say it with me. Write it down. Spray paint it on a wall. Hey, what's going on, Ed? How you doing? Nice to see you. Guys, we're going to focus today on rules. We're going to talk about patterns. Up 10 points. I like it. You following rules, Conrad? Trading with the momentum, trading with the direction, trading with that clear path, all those things. You know I'm going to ask. It's what I do. That's a good start, though. Makes a difference, doesn't it? Guys, doesn't it make a difference? Let it be easy. Let it be simple. Let it be obvious. That's what we're going to do today. I'm pretty excited about it. Awesome, man. Very cool. Be careful studying John Novak's trades, Gary. He's got 27 years on you. Just throwing that out there. I like it, though. I've been watching your NASDAQ trades, Gary. You've been doing a great job with them. It almost seems like it suits you a little bit. It moves too fast to let you overthink, right? Some people do that, right? Man, it moves so fast, I underthink, I think. And some people, it's smooth. It works right with their brains. Everybody's different. That's the wonderful thing about the world. I think, anyway. Guys, I am going to introduce you to forexfactory.com. Forexfactory.com is where I get my news every morning. But the cool thing is I don't get my news here. I don't care what they say. I've never really cared what the news says. But what I do know is that news can create a reaction, guys. News can make the market bounce and spike. It can make the market move so fast that it's untradeable. So I like to know when it's happening. And I like to give myself a little window, a few minutes before, wait for it to settle down. Guys, there's so many hours in the trading day. I don't have to be in the market every minute of the day, right? 90% of the day, I'm not going to be in the market. 10% of the day, I'm going to take those advantages and turn it into a trade. 9:45 a.m. today, guys. Write it down on a piece of paper. Ask Siri to set a reminder for you. Flash manufacturing, PMI. Yeah, I know, right? Me too. Flash services PMI, guys, 9:45. That's high impact. That can make the market go kooky crazy. It's okay to sit on your hands at 9:40. Just go, you know what? There's some big news coming up. I'm going to sit on my hands and not jump in front of that freight train. 10 a.m. is a new home sales, the Richmond Manufacturing Index. Guys, I don't know what the Richmond Manufacturing Index is, but what I do know is that it can make the market bounce and jump. So 9:45, 10 a.m. Guys, there's a pretty good block of news there. Sounds like a great time to go grab breakfast, refill your coffee, grab a glass of water, toast a bagel, whatever makes you happen. But I'm always paying attention to when the news is happening, just so I don't get caught by it. And then, guys, we're going to do a little different approach today, just because I feel like it. I hope that's all right. New users. Who's in here that's new? Jeff, it's good to see you back in here. Who else do I have? Anybody else on a demo in here? Conrad, I know you qualify as new. Actually, we all qualify as new, don't we? Nobody's ever going to stop learning. We're going to keep focusing each and every day to get a little bit better, guys. So we're going to start the day looking at a high probability trend trade. I'm just trying to throw a wrench in my works here just to change it up a little bit. But we're going to focus on a high probability trend trade. It's pretty simple. It's defined as when each indicator on every chart agrees with the rules for a trade, right? Everything agrees, guys. When you look at your chart, you're like, oh my gosh, everything's red, everything's down, everything's strong. This is your high probability trend trade, guys, and we're going to talk about one that typically wins 70 to 80% of the time, and that's a high probability trend trade that happens after a termination condition on the 13-2. So we're going to talk about the rules for the high probability trend trade. We're going to talk about the advantages that taking this trade presents. We're going to look at it visually. Hopefully we're going to see it on your charts. And we're going to look in the live market and see if there's opportunities as well to use that for a lesson. When you talk about a high probability trend trade, it's only 3 rules. I've got a lot of pictures up. It's 3 rules that create 3 advantages. And I want you to think about rules like that. Every time you're talking about following a rule, every time you're talking about using a checklist to enter a trade, keeping it mechanical, making sure that you have those advantages. Every time you have strong triggers, rule number 1, you have the advantage of momentum, guys. And every time you decide to trade without strong triggers, you forfeit the advantage of momentum. And I think that if you phrase it like that, it helps you a little bit. Why on earth would you forfeit momentum, right? We're looking to win. We're looking to make money. We're looking to win more than we lose. These advantages are going to help you do that. Whenever termination conditions are false, we have the advantage of a clear path. Once again, if you decide to trade into a termination condition, you have forfeited the advantage of a clear path. And then finally, we're going to use entries. We're going to use a smaller chart and really refine and get into the market where it's most likely to continue. And when you do that, when you follow rule number 3, you have the advantage of an entry area. And once again, of course, should you choose not to enter the market at an area inside of favorable large triggers, it's an advantage that you forfeit. And I'm not saying that there won't be trades where maybe one of these advantages isn't present, but your ability to recognize them will assure you that the other 2 are. And that works you into a medium probability trade. And that's going to be a little down the line, guys. I always ask my new users, give me 20 days commitment. 20 days of simplicity, 20 days of the best, 20 days of focusing on making sure each and every trade you take has these 3 advantages. Because it's going to teach you to read your charts, guys. And that's really the goal, is to make you guys chart readers, not so much day traders. Day trading is a result of the process of learning to read your charts. Guys, you're going to be able to open up this software. You're going to look at your indicators and you're going to understand where the market is likely to continue. Those continuation points are going to be where you enter the market for that high probability trend trade. You're going to understand where the market is likely to go, and as you develop a management plan, you'll be able to use Fibonacci. You'll be able to use momentum indicators to tell you where your target should be, the highest probable spot for those to go. And you'll understand where the market is likely to stop. And these are those termination conditions, guys. And not only will an area where the market is likely to stop, what we call the termination condition, give you a giant waving red flag that your clear path has gone away, but it's also going to serve as the anchor for that highest probability trend trade that you can take. That trade, that 5-1 trend trade that utilizes these 3 advantages, that happens after a termination condition on the 13-2 when the market's coming from what we call a strong top or a strong bottom. So in the spirit of simplicity, guys, let's focus on one trade. Let's take that first hour and really commit ourselves to understanding the advantages. And we're going to do it on 2 charts. Guys, the reason we use 2 charts is we use one chart, the 13-2, as a broad stroke of a brush. You'll use one singular bar, and you'll be able to understand the trend of the market. If the background is green, we're in an uptrend. If the background is red, we're in a downtrend. And guys, I want to show you just how easy it can be. That's it. This is your 13-2 chart. If that background is green, we're only looking for rules to be met for high probability trend trades long. Give yourself the advantage of trading with the trend. If the background is red, you're in a downtrend. You're only looking for rules to be met for high probability trend trade short. And guys, the trend is going to change. It really is. And you'll have to stay focused on making sure that you're trading with that trend. But how's that for the easiest first lesson, guys? Day one, you've already mastered identifying the trend. Great work. Rule number one is going to be met on the 13.2 chart. In 13.2 chart, again, it's a broad stroke of a brush. It's giving us that overall temperature of the market. Rule number one says that you have to have strong triggers on a 13.2 chart. And then once again, guys, I'm going pictures all day long. This is your rule number one picture. This is what strong triggers look like. In an uptrend, your small triggers, which are these solid lines, should be above your large triggers, which are wide, angled in the direction of the trend. And guys, it's the space that's created between the small and the large that lets you know that the odds are favorable for this market to continue up. This is your first advantage visually. Small above the large are wide, they're angled. It's like scissors open, ready to cut. In a downtrend, smalls are below the large are wide, they're angled in the direction of the trend. Guys, this is your best of the best. This is your strongest trigger look. And when you have strong triggers, the odds are favorable for the market to continue in the direction of the trend. And you're going to see it labeled on people's charts. You're going to hear me reference odds favorable momentum, that OFM, when the market is likely to continue. And if you commit to this look, commit to the advantage, it's going to make life a little bit easier on you, especially as a new user. Can you guys see this picture? I'm looking at, or are you still looking at the glossary of terms? Glossary of terms. Ah, okay. Hold on just one second. I just looked up. Sorry, guys. I apologize. Let me try this again. All right. Glossary of terms. Yes? Some days Discord likes to mess with me. And now we have rule number one. There we go. Guys, I'm sorry about that. Now we've got picks. Good morning. I love it. Man, if you don't have bumps in the road's no fun. I firmly believe that. So let's do it again. I'm not scared, guys. This is my classroom, right? We can do whatever we want as long as we want. Let's start with that trend picture. How easy is this? Green background, market says up. That had to sound ridiculous while you were looking at the glossary of terms. Background is green, market is up, only looking for rules to be met for high probability trend trades long. Background is red, trend is down, only looking for rules to be met for high probability trend trades short. Guys, this is the first advantage that you can give yourself. Trade with the trend is your friend. Have you guys heard the story? John Novak had a broker once that told him, hey, Mr. Novak, I can guarantee you $1 million in your account by the end of the year. To which John replied, of course, man, tell me how. That sounds great. Let's get this done. And the broker said with the straightest face ever, all I need you to do is fund that account with about $3 million and fight the trend. By the end of the year, you should be down to $1 million. Dun-dun-dun. True story, guys. And I love that story, but it's just a funny little reminder. Let the trend be your friend. And then once you have that trend, guys, let's get the momentum. Let me find my picture of the advantages. We didn't see any of those advantages, did we? Where on earth is my classroom? There it is. Let's talk about the rules, right? The advantages. The first advantage, momentum, odds favorable momentum. Strong trigger lines. Making sure that we have the advantage of momentum coming to you on the 13.2 chart, on that broad stroke of a brush. Rule number two, making sure that there's nothing in the way, no termination conditions. No areas likely to stop the market. Guys, this is rule number two. And once again, this happens on the 13.2 chart. And we're only using one bar. One big, giant 13.2 bar, guys. We're determining the trend, the momentum. whether or not there's anything in the way, direction and areas. And guys, this chart is that broad stroke of a brush. It's taking that Wagner power sprayer and hitting the side of the barn before we refine it. And when these rules are met, this is where you go to the 5-1 chart. Guys, this is a smaller chart. It's a faster chart. It's a refinement tool. That's all it is. Your reasons to take a trade happen on the 13-2. They happen on the large chart. Your entry comes from the smaller, faster chart. And this is where rule number 3, using that limit order, waiting for the market to come to you. You're going to buy or sell a pullback in an area. Good morning, Marshall. Inside of favorable large triggers. Trading from lines, right? Guys, this is going to allow you to reduce your risk. It will allow you to maximize your profit potential. I teach on the 13-2 and the 5-1 because it typically presents more opportunities in the market. The reality is what I teach, the patterns that we're going to look at, that we're going to recognize, these patterns are all going to happen on any time frame. They're going to happen on any style chart. You're going to have the same look of momentum, those strong triggers on a 13-2 and a 5-1, or maybe a 34-5, a 21-3, an 8 range, a 13 range. It doesn't matter. All we're doing is becoming comfortable with the look. Same thing with termination conditions. You'll be able to identify the recipe for a termination condition on any time frame, but we're using it on the larger time frame. And we're doing that because it's a matter of knowing who's in control of the market, right? The large crowd opinions are what the large chart reflects, guys. The big charts are going to define your areas. The big charts are going to define your direction. They're going to define your momentum. The small chart reflects what the small crowd's thinking, guys. There's always a group of yahoos that want to fight the overall trend, that want to fight the overall momentum, that want to make sure that even though the market says everything's going up, they want to try to make it go down. And we are so thankful for these people, because these are the guys that are going to get us our best of the best entries, guys. So we're going to focus on 2 charts, right? Keep it simple. You're going to see more charts in this room from people with more experience. If you're brand new, these are the only 2 you need. And from these 2 charts, we're going to gauge 3 advantages. And guys, this is your high probability trend trade. This is your best of the best. This is your first 20 days. 20 days focused on nothing but entries, guys. I want you to abandon the idea that you have to win on day 1. I want you to abandon the idea that you have to be great at this on day 1. I want you to give yourselves just a little bit of grace. Allow yourself to be a student. Because this is brand new and it takes a little bit of study and it takes a little bit of repetition. But I'm comfortable and confident saying that if you keep it simple, guys, we're looking at 20 days for you to understand the high probability trend trade. 20 days and you're going to have a plan that's been proven to win more than it loses. You're going to have a way to be a consistent winner while you expand your knowledge with the Nexgen software. So that's what we're going to do today. We're going to talk about the rules. We're going to talk about the advantages. Everything that I talk about, guys, it comes from the education page. There really are no secrets with Nexgen. We're going to give you everything that you need to be successful. And the cool thing is once you become a client, you get into these Discord rooms that are available to the client. And it's going to go through things like advanced chart reading. It's going to go through market flow stuff that you're not going to get as a new user, because the goal is to keep you focused. So we're going to go to that focus, and we're going to start with rule number 1, and we're going to talk about strong trigger lines. Trigger lines come in 2 parts, guys. 2 flavors: small triggers, large triggers. Small triggers are the solid lines. Large triggers are the dashed lines. And they work together to create momentum. When the smalls are above the large are wide. They're angled in the direction of the trend. Guys, this is what we call a strong trigger line. This is rule number 1, defined in pictures. When you have these strong triggers, the odds are favorable for the market to continue in the direction of the trend, guys. Odds favorable momentum. It's a key phrase that you're going to hear in class. And when the momentum is odds favorable, guys, that's the best of the best time for you to buy a pullback. Whether it's a long trade or a short trade, but this pullback on the smaller, faster chart looks like a tail on the large chart. When you have odds favorable, guys, this is your best look, and ultimately these are going to be your entries for that high probability trend trade. But first, we have to take those strong triggers, we have to couple them with no termination conditions, guys. This is about as simple as I can make it on momentum. Smalls above the large are wide, they're angled in the direction of the trend. We have odds favorable momentum. When the smalls are inside of the large, guys, and this is important, when the smalls are inside of the large, we have weakened the large triggers. And when you weaken large triggers, guys, anything can happen up or down. If everything we do revolves around advantages, guys, anything can happen is hardly an advantage. And you'll notice that it happens a lot right before that trend ends, right before the market reverses. So commit to the best of the best. Odds favorable momentum, odds favorable momentum. And guys, when your trigger lines don't agree, maybe your smalls are down and your large are up, or your large are up and your smalls are down. Or maybe both of your triggers are down, but the trend is up, guys. You can visually see this. You can keep yourself out of a situation where you're trying to predict the movement of the market. You're trying to predict the direction of the market. Guys, you can literally sit on your hands when things don't agree, and it costs nothing to stay out of a trade. And it keeps you from hoping, from wishing, from praying, from trying to predict which direction the market is going to go. Guys, this is your odds favorable momentum. This is rule number one, and this is how every trade you take should be started. Can I get a Y in the room? Is everybody good with me on odds favorable momentum? Can we move to termination conditions? And y'all, I can't stress this enough. If you need clarity, just raise your hand. I got you. I'm always happy to pause, to go back, to restate, to make sure that you're comfortable before we move to that next advantage. Because strong triggers make the market move. Termination conditions can stop it dead in its tracks. And what is a termination condition? A termination condition is nothing more than a Fibonacci-based indicator. And I'm going to section 2 here. It's a Fibonacci-based indicator that may reverse the market, and it's based on a comparison of the trigger lines in these areas. It can be blue Fibonacci support, red Fibonacci resistance, yellow 1-to-1 dots. It may be a cyan divergence low line or a magenta divergence high line. Guys, these are all, remember, 13-2 termination conditions. There is a third divergence in the same area. This is going to happen on a smaller, faster chart, and I'm going to show you an example of it and how you can use it not only to recognize change on the 13-2, but also to manage trades that you've gotten into. And then we'll also talk about when mid-bands can behave as termination conditions. But all of these are going to be areas that may stop the market. And notice that I use the word may, because nothing is guaranteed, right? So we're going to incorporate a little two-part recipe to make it happen, to determine whether or not one of these areas is likely to stop the market. And it involves the trigger lines, and it involves the areas, guys. And I just put that visually, all the areas. For those of you that are brand new, this is a great map to know what you're looking at on your charts. It is a two-part process to recognize a termination condition. I'm going to start with this one right here. Your Nexgen dynamic Renko bars in this downtrend are all working down. The bars are red, they're moving south, and then they come in contact with support. Price reaches an area is the key phrase that we're going to use. And this is the first step in determining a termination condition, is price reaches an area. And it's imperative that you understand it doesn't mean that the triggers reach the area, but those actual price bars are going to come into Fibonacci support. When price reaches an area, all you have to do is ask yourself, where are the trigger lines? Price reaches support, the trigger lines remain above support, therefore support may reverse the market. Price reacts to Fibonacci, guys. We're not the only people that see these pretty red and blue lines. big deep pocket investors, people that are capable of making the market move any direction they want it to move, they see these areas too, and they may react to them. So when price reaches the area, the trigger lines haven't broken through, we have what is called a termination condition. And when a termination condition is present, you do not have a clear path, guys. Rule number 2 has not been met. Simple recipe, right? Price reaches the area. Well, let's look at it from highs. Price reaches an area. Those areas, remember, can be a divergence high. Guys, a divergence high on its own is nothing more than a pivot. And this sometimes is an area of confusion for new people. This is a pivot that's lost momentum. Divergence simply means that momentum is lost. This divergence line, this magenta line, will print off to the right. But remember that the recipe for a termination condition begins with price reaches the area. So as the market comes back into this divergence high, all of my trigger lines remain below. Now I have a termination condition. This termination condition ultimately creates a full reversal in the market. My large triggers go from green to red. My small triggers ultimately give me odds favorable momentum. When I have a termination condition that creates a full reversal, this is the anchor for your best of the best trade, for that highest probability trend trade. Looking for shorts after this termination condition from a high typically yields the best results. You'll see it here. Price reaches resistance. All of my trigger lines remain below. No more long trades into the area. You also see it at 1-to-1s, guys. Price reaches 1-to-1s. All the trigger lines remain below. Notice that they also remain below resistance. Multiple areas in the same location, guys, only add strength to the top. And that's the pictures, terminations from a high point. Is everybody comfortable with the recipe? It's almost too simple, right? Price reaches the area. If the triggers don't break, don't trade into the area. Let's look at them from lows. It's the exact same scenario, guys. And if you commit to the recipe, it's easy to find success. Price reaches 1-to-1s. Absolutely no trigger lines break through, guys. And look how this termination condition creates a full reversal, gives you odds favorable momentum. And there's some of those tails, those potential entries on the 5-1. That's your highest probability trend trade that you could ever take. Termination condition creates a full reversal, provides odds favorable momentum. Another one of those tails, guys. We call this a strong bottom. This is the anchor for your highest probability trade. Once again, on these divergence lows, the first pivot is nothing more than a pivot that's lost momentum. When this pivot loses momentum, right, the market pushes up, and it's only when price reaches that divergence low, the trigger lines remain above. Now I have a termination condition. Simple recipe, right? We've got them from lows. We've got them from highs. Is everybody good with this? I've got 34 of you in here. I've got a couple of you that are brand new. Guys, the clear path coupled with momentum, that's where it's at. That's what's going to get you your best of the best. That termination condition creating a full reversal. That full reversal creating odds favorable momentum. Guys, there's one of those tails. That's your absolute best of the best trade. That's your highest probability trend trade. Sometimes, actually, you know what? Before we do that, we've talked about when a market is likely to stop, right? When we've reached that termination condition. Oh, that's the wrong picture. It's a good picture, though. Price reaches the area, absolutely no triggers through. The area is not broken. The path isn't clear. The rule hasn't been met. You put yourself in a state of hoping. When both the small and the large triggers break through an area, we consider the area broken, guys. Resistance begins to act as support. And when you get that odds favorable momentum, the path is now clear. There's one of those tails, one of those potential longs. In the beginning, as you look for this highest probability trend trade, guys, two options. You either have a clear path or you do not. And that's it. If you let it be simple like that, it makes it easy. You're going to learn to be patient, but it really takes the pressure off of you of making decisions. But there is going to be a look that you're going to work your way into, and you probably will take trades. And this is what we call a 50-50 look, guys. When 50% of your trigger lines make it through an area, the small trigger lines will break through. Your large trigger lines do not. When you have a 50-50 look, guys, you have an area with the potential to break. 69.80 has the potential to break. It's imperative that you have odds favorable momentum, that you have the strongest trigger look that you could possibly have. It increases the odds of this area breaking. But it's not a clear path. Rule number 2 hasn't been met. Even on a 50-50 trade with that odds favorable momentum, you are willfully forfeiting the advantage of a clear path. This is not a high probability trend trade. And you can see in the picture right here to the left, smalls made it through the area. There was odds favorable momentum. And even there's one of those tails for the potential entry. Ultimately, small and large don't both get to the other side, and this area ends up holding. And the market ends up reversing, guys. Sometimes there's that little bit of overrun. So when you have a 50-50 look, it's imperative that your entries are perfect, that you're not forfeiting any other advantages, that your smaller charts, your entry charts, don't have that loss of momentum going into it. And we'll talk about the perfect entry. We'll look at a couple pictures. But before we get to entries, I want to show this picture, guys. Sometimes the market turns. You haven't reached Fibonacci. All of your trigger lines have broken through the area, and the market goes the other direction. You'll see it sometimes even with odds favorable momentum. This final termination condition is going to help you identify when that change is happening. Your slower chart is going to be slower to give you that information. So this look on the 5-1, guys, 3 divergences, 3 losses of momentum in the same price range, it may terminate the trend. There's that word again, may. It's never guaranteed, but when 3 divergences print in the same price range, we forfeit the advantage of a clear path. It's a market that's likely to stop, that may reverse. This look, 3 divergences, 3 losses of momentum, it becomes even more powerful when those small triggers work their way inside of the large. Remember, these patterns are patterns no matter what time frame we're looking at. Odds favorable momentum, even on a 5-1, works its way to anything can happen triggers. That anything can happen triggers is coupled with 3 losses of momentum. Guys, visually, you can see that that market may be turning. Becomes even more powerful when that third divergence is higher than the previous from a low, or lower than the previous from a high. You get that head and shoulders pattern. It means that not only are we losing momentum, but price can't even make it to that same lower level. Guys, this look from a low and this look from a high, these 3 divergences will not only tell you that the market may be turning, it'll also let you know that if you are in a trade, maybe it's time to get out of that trade, right? Maybe it's time to take profits. Maybe it's time to protect ourselves to get to break even because the conditions are changing. And when you see it from a low and you see it from a high, it's going to help you identify situations like this on the 13-2, where you have a clear path. Maybe when you even have a clear path with odds favorable momentum. But it's letting you know that change is coming, or at least it's potentially coming, and it allows you to avoid continually going in the direction of the trend when the smaller, faster chart says that that trend may be ending. And guys, that's rule number 2 in a nutshell. What was that? 7 minutes, 8 minutes to talk about a rule? 2 to 3 minutes to talk about the first rule. Guys, we're keeping it simple. Price reaches an area. If the triggers don't go through, you don't have a clear path. Guys, if the small are outside of the large and everything is strong in the direction of the trend, you have momentum. And when these 2 advantages are present, we're going to go to that refinement chart, right? We're going to go to that smaller, faster chart. And what happens in 1 bar on the 13-2 is going to happen in multiple bars, 15 to 30 sometimes on the 5-1. When the 13-2 gives me the advantage of momentum, when the 13-2 gives me a clear path, guys, we're going to use this smaller, faster chart, and we're going to embrace the idea that there may be 15 to 30 bars inside of this 1 bar, and it's going to allow us to use a limit order to buy or sell a pullback at an area inside of favorable large triggers. This broad stroke of a brush gets refined down, pinpointing where the market is likely to continue. And you're going to do that. Let's get to that section. You're going to do that by identifying a window of opportunity, guys. So when the rules are met on the 13.2, this is the look on the 5.1. This is the moment that you start looking for an entry. You say, I have momentum, I have a clear path. It's time to get in this market. You're going to use a limit order, meaning that you're going to wait for the market to come to you. Remember those yahoos that push against the trend? We're waiting for them to show up to the party. And we're going to buy or sell a pullback at an area. Guys, there's 3 areas. Trading from lines. I love that phrase. John Novak put that in the manual recently, did a little bit of rewording. Trading from lines. Let your trade originate at a line. Those lines can be Fibonacci support or resistance. It can be a mid-band, or it can be yellow 1-to-1s. And we need a pullback to these lines, and these lines need to be inside of favorable large triggers. And favorable large triggers, I share this picture every day because of the advantage that it provides. I think it's imperative that you embrace this. Favorable large triggers mean that both your large triggers, the smooth triggers on the 5.1, and your synthetic triggers, which are nothing more than the large triggers from your 13.2. We call them synthetic because we pull them from a different time frame. They should be overlapping. They should be trending one on top of the other. In an uptrend, they should be blazing up like a shark preparing to breach. In a downtrend, they should look like a submarine working together, about to dive. And guys, these favorable large triggers are going to give you the smallest window of opportunity. The smallest window of opportunity is going to give you the best chance to reduce your risk, to maximize your profit potential. And we identify that window of opportunity when a reversal bar prints. Everything says up. The large triggers are up. They're strong. We have our areas that are falling within those large triggers. And now the market says it's time for a pullback. And that begins with a reversal bar. And at the time of the reversal bar, you're going to create a window of opportunity. Your window of opportunity for a long trade will extend from the highest point of support to the lowest point of support. And guys, here's the key phrase: inside of favorable large triggers. For a short trade, it'll be the lowest point of resistance to the highest point of resistance inside of favorable large triggers. Your job as a rules-based trader is to get into that market where it's most likely to continue, which means that you're going to right-click on your chart, you're going to activate a limit order, and you're going to wait for the market to come back to that window, and that limit order is going to sit at the top, maybe even a tick or two above. Because remember, on the 13.2, you have odds favorable momentum, and on the 13.2, you have a clear path, and that limit order sits, and it waits right above that mid-band inside of favorable large triggers. And if the market chooses to come back to this area, guys, you are in a trade. You're in that high probability trend trade. You're in that trade, with the advantage of momentum. You're in that trade with the advantage of a clear path. And now you're in that trade with the advantage of an entry area, that spot where the market is most likely to continue. You've embraced all 3 advantages. You're in a long position, guys, and your protective stop, your initial stop, will go outside of that window of opportunity, that point where the market should not go. If this trade's going to be a winner, more often than not, it's going to continue from that area inside of favorable large triggers. Guys, you identified that area as the market started pulling back from your highest point of the trigger lines to the lowest point of the trigger lines, and then refining that to even tighter to the highest point of support to the lowest point of support. Now you have a window of opportunity, that point where the market is likely to continue. It's okay if your small triggers on the 5.1 turn against you, guys. It's a smaller, faster chart. It's a refinement chart. We're defining momentum on the 13.2. New users. You're going to focus on ticks instead of areas. It's imperative that you trust the system, trust the process. You're going to build that trust through repetition, through taking pictures. I see a lot of new users getting in at the top of this bar because they thought it was going without them, only to watch the market come back and do exactly what it was supposed to do. Take a deep breath. You're on simulator. Relax. Let the market come. And then the one thing that you have to remember is that this is a window. And the market may go to the bottom of the window, which means that you can't get caught up on a trade going against you 3, 4, 5, 6, 7 ticks, right? Because you're still in that window and the advantages are still present. It's when the market moves beyond that window that you'll have a stop waiting. You'll say, you know what? It's no longer coming from where it should come from. I'm going to get out of this trade and I'm going to wait for the next best opportunity. And guys, that's going to happen from time to time. If you take 100 trades and your trades win 70 to 80% of the time, 20 to 30 of those trades are a cost of doing business, right? We're going to allow the market to be wrong with dignity. We're going to let it do it gracefully. And we're not going to worry about whether this wins or loses. Going to focus on the execution, guys. Make sure that we have those advantages in place. And when they're in place, this is a trade that I take 1,000 out of 1,000 times without hesitation, because 70 to 80% of the time, this is my result. Once the market begins to move in the direction of my trade, I'm going to reduce my risk. I'm going to go from outside of that window of opportunity to a tick or two below that reversal bar. Because you're going to wait for those lines inside of favorable large triggers, your risk is going to be reduced. And the best part is your profit potential is going to grow exponentially because you are waiting for what is typically the bottom of that move. Guys, is everybody comfortable? Do me a favor. We've gone through a couple different things now. We've talked about odds favorable momentum, right? Strong trigger lines, the advantage of momentum. Everybody's cool with that one, right? Easy to recognize, takes just a matter of seconds. If I go to the live market, I have odds favorable momentum. How easy was that? Smalls below the large are wide, they're angled in the direction of the trend. The smalls are through my areas, but the large are not, which tells me that I have a 50-50 trade, right? That means that this is an area with the potential to break, but it hasn't broken yet. And since it hasn't broken yet, I don't have a clear path. Rule number 2 is not met. And then finally, we talked about that window of opportunity, right? Identifying where the market is likely to continue, lines inside of favorable large triggers, fibs, mid-bands, and 1-to-1s. Reversal bar prints from the highest to the lowest point of the triggers, looking for the lines that fall inside. Thank you, Ron. News in a minute, guys. This becomes that area where the market is likely to continue. You'll see the same thing for a long, right? Areas inside of favorable large triggers, not worried about the areas outside because those aren't the areas where the market is likely to continue. You guys want to watch the S&P? Let's see if news moves it. Been a pretty straight run down, guys. Here we are at a termination condition. The smalls have barely passed, the large have not. I don't have odds favorable momentum. And check this out, 1, 2, 3 divergences in the same location, and it's pushing that market up beyond. But if I come back here with that odds favorable 50-50, right? Maybe not even 50-50, the large might be through. There's that pullback right to an area of resistance inside of favorable large triggers. Guys, we're looking to see if there's a reaction. There's a high probability news release. It just released. And there it goes. You'll see little spikes, little bumps, little jumps, guys. It's imperative to keep yourself in a position where you can control your position, right? So as that market settles down, guys, we've got our odds favorable momentum. We've got our advantages with no termination conditions. You've identified the area inside of favorable large triggers. You have the recipe for a trade. Your job now is to develop trust, to go back and study it. You're going to study it on your 2 charts by going back on your 13-2 and circling tails when the rules are met. And guys, it really becomes a pretty easy process. If I go back on my 13.2, I'm looking for odds favorable momentum. If I see a tail, I'm going to circle it. No terminations, right? There's that tail. And I can scroll back and I can look for this advantage. There it is again. One of those tails. Resistance becomes support. Look how the market pulls right back to it. Guys, this becomes your study tool. Going back and creating recognition through repetition. And then all I have to do once I've circled those tails when the rules are met, let's go back to 1921. It was a good year. Did that tail end up at an area of support inside of favorable large triggers? Absolutely it did. That was a dud, wasn't it? We've got more news in 14 minutes, Ron. Guys, give me a Y if you see it. Odds favorable, right? Area breaks. Look at this pullback. Right to support, right inside of favorable large triggers. Guys, this is your best of the best. Your job, Jeff, since you just posted, I'm going to direct this one at you. Your job is to go back and circle tails. Your job is to take this picture using capture software. Jeff, are you comfortable with your capture software? And guys, the most important thing you can do is annotate a chart. Not yet? Well, let's go through it. Odds favorable momentum. Yes. No terms. Yes. Right? Advantages, advantages, advantages. Come into your 5-1. And annotation is key, guys. Area inside of favorable large triggers. You can shorthand it. It's okay. Guys, this is the recipe for a high probability trend trade. Your job is to take this picture, to annotate it. Annotation is key because not only are you reinforcing that you understand the advantages and what you're looking for, but visually, you're connecting this look to these advantages. And then guys, once you have them, click share. Get it to screencast. I'm going to open up my TechSmith Capture while I do that. And it's going to allow you to get this link. And you're looking like Jose just posted a link that says screencast.com, a bunch of letters and numbers. Take that picture and bring it to the room, guys. Post it in the room. And every time you post a picture in the room, what I'm hearing in my head is, hey, Mark, I want you to take a look at this. I want you to look at my chart reading. I want you to look at my entry. And I want you to give me feedback to make sure that I'm following the rules. And if it is a high probability trend trade, then there's one more thing that you need to do. Nexgen provided you a spreadsheet, guys. They gave you a tracking sheet. If it is historical study, let me see if I can move this thing. There we go. Guys, if it is historical study and you have that perfect high probability trend trade entry, remember 20 days on entries, come to your favorite looks. Right click, turn it into a hyperlink, right? Put that URL in there so you can go back and study it. And then call this perfect high probability trend trade long. You can come back. You can recognize this room. Guys, this is 200 pictures of entries. 200 pictures of rules-based entries. Not only high probability trend trade, but also some of those medium probabilities, some of those 50-50 trades. I just put this spreadsheet, guys. This is my personal spreadsheet. Just put it in the room for you. So Jeff, your job is to take an afternoon, crack a cold beer if that's your thing, and look at these pictures and commit these looks to memory, guys. It's such an important thing. And then Jeff, as you do your study, do you have your capture software up? If you go to your search bar and type in TechSmith, and this was downloaded when you got your software. Pull up your TechSmith Capture. Taking pictures is unbelievably easy. Annotating charts is unbelievably easy. Watch this. I've got two charts, right? I've got that termination condition. Creates a full reversal, multiple divergences, comes right up to resistance. I'm going to take my TechSmith Capture software and I'm going to hit this big red button. And it's going to let me take a picture. Guys, posting pictures in class is the first step to putting you on the path to becoming a confident trader ASAP. If I hover over one chart, it's only going to give me one chart. It's so important that I have both your large chart and your small chart. So I'm going to left click in the upper left-hand corner on my large chart, and I'm going to bring it all the way down to the bottom right hand on my small chart. Guys, it helps me a lot if I can see prices, if I can see timestamps, so that I can line up the two areas. When I release the mouse, it's going to give me the option to take a picture. I'm going to hit capture an image, and up comes my image preview, guys, and there's all that information. At this point, the only thing that I need you to do, if there's something that you want to point out, use an arrow, right? Use a shape. Hey, check out this area, Mark. But the most important thing you can do is grab that call out button, click and drag, make a box, and put this as a termination condition. No long trades into an area when price reaches and triggers don't break. Even without taking a trade, I've just gotten smarter about termination conditions, right? And guys, this is such a key thing. Take this picture, upload it to Screencast. When you click that upload button, it's going to give you the link. Click copy, put it in the room, and then once again, what this says to me is it says, hey, Mark, do me a favor. Take a look at that picture. I want to make sure that I'm understanding termination conditions properly. You'll get feedback 15 hours every week. You're going to get feedback on anything and everything that you post in the room. We're going to talk about what you see. If there's other things that I can find that may be helpful to you, we'll talk about it. We're going to talk about the things that you do great. We're going to talk about the things that you need help with. The patterns in you, maybe you trade into termination conditions. And if you do, like I did, you can take that same picture and bring it over to your termination conditions section. And this becomes an opportunity for you to study over. This is textbook termination. Drop it in there. Guys, 2 pictures I've taken so far. I've taken pictures of the absolute perfect high probability trend trade long. And I've also taken pictures of a termination condition, that area likely to stop the market. I'm creating confidence through repetition. Jeff, if you need help with Screencast, let me know. Let your salesperson know. But guys, there's a path to becoming confident, ASAFP. And it starts with posting pictures. Guys, post everything you do in the classroom. You should be taking a minimum of 15 pictures a day. 15 pictures a day is 300 pictures a month. That's 900 pictures over the course of 90 days. Guys, the people that take the most pictures, that annotate charts, that provide the best information, the most thorough information, that use the language, these are the people that get to where they want to be sooner than later. Taking pictures, post them in the room, and then the second half of that path, use that spreadsheet, guys. That spreadsheet is going to help you keep track of everything you do. The first page, every time you take a trade, every time you take a trade, you're taking that trade. Sorry, my OCD is going crazy. I have to get all the borders. There we go. You're going to take that trade, you're going to put it into the spreadsheet. You're going to talk about how you felt, what type of trade it was. Was it a termination that created a full reversal? Did you have odds favorable momentum? Did you have great momentum on the 5-1? Guys, go through. Every time you take one of these pictures, every time you annotate these charts, everything that you do on Monday, and I lost that picture, I didn't mean to pull it out of here. Everything that you do on Monday, you're going to study Tuesday morning, right? You're going to wake up, you're going to open your spreadsheet before you try to be a day trader. I've got this picture somewhere. There we go. And you're going to study the previous day's trades, guys. What worked, right? What brought you success? Was it odds favorable momentum, no termination conditions, and the right entry? What didn't work? Did you trade into termination conditions? Guys, this is where you recognize patterns. Patterns in the market, patterns in yourself. What felt easy? What kept you relaxed? What felt forced? Guys, I can tell you from experience, when new users take a high probability trend trade, they don't get nervous because they understand through study the advantages. And guys, a brief historical study each morning. Take 10 minutes out of your morning. Don't convince yourself that you don't have time to do this. It's going to prepare you for the day and it's going to accelerate that learning curve without a doubt. And the more pictures you take, guys, this is from November, I think. 4,500 pictures since November. That's going to be your path, guys. That's going to get you where you want to be. This classroom is designed so that you can learn the trigger line looks, the Fibonacci rules for when it's okay to trade. We will discuss them every day in great detail and make sure that you're comfortable with those. Your job is to simulate, to post pictures in class until you're sure that you're trading the correct rules. Don't practice the wrong trades because you want to be a simulator millionaire, guys. Those broken rules feel like a short-term victory. They're typically a long-term failure pattern. Simplify your plan, guys. Keep it easy. What are the looks that you're going to commit to? You have to know the looks so that they become easy, so that you're confident, so that you trust them. I gave you guys 200 perfect entries. All you have to do is study them to go back and find them. And then use market replay, guys. You can go back on NinjaTrader 8, NinjaTrader 7, and you can replay the day. How do you get a month's worth of experience in 2 weeks? You use replay. You replay every day, guys. It's the 2-for-1. Fix your mistakes. Skip the trades that you shouldn't have taken. Take the trades that you should have taken. And guys, market replay allows you to hit pause before you enter a trade. And when you hit pause before you enter a trade, you should be working off of a checklist, right? That's the wrong checklist. You should have your rules laid out in front of you. Have they been met? Do you have odds favorable? Is it a good top or bottom? Guys, I'm going to give you that checklist in the room right now. I've never had anybody use this checklist. A week straight, nothing but the checklist and not do better than 70% winners ever. In the history of me teaching this classroom, it's never happened. I'm not saying that it couldn't happen. But I'm saying that so far it has not, guys. Use that checklist every time. Hit pause. Take pictures of the correct trades, share them in class, get that feedback. 15 hours every week. I'm going to be able to tell you what you did right, what you did wrong, and then together we're going to work to get you where you want to be. We're going to repeat this process every day until you always take the correct trades. And guys, if you're always taking the correct trades, if they have been proven to win more than they lose, notice that it doesn't say repeat this process until you're always winning, until you're always taking the correct trades. Guys, you are proving to yourself that you can win. And then it's time to go to one of those prop firms, guys. And the easiest way to get to where you want to be is to write yourself an example plan, to have a verbal affirmation of what it's going to take to get you in the market. Personalize it. My trade is, guys, news in 1 minute. My trade is the high probability trend trade. In order to enter this trade, I must have the conditions of this checklist met. Guys, get in the habit. Mechanical entries via a checklist. It reduces your desire for opinions, for hope, right? For wishing the market would do what you want it to do. And when it's coming from a good top or bottom, that's your 70 to 80% typically winner, guys. Here's the advantages. And it's up to you to take pictures. Take pictures of your perfect long. Take pictures of your perfect short, guys. Study them, steal them, grab them from the manual. But in the first 30 days, the more pictures you take of your charts, the faster you're going to get to where you want to be. I put a couple pictures into my plan. And this is an example of how to write your plan, guys. Here's a pretty simple plan. You can even link them so that they look better, right? Keep them in there. Once you define your entries, once you focus 20 days, getting the best of the best entries, you're going to have to learn to manage those great entries, guys. And great entries create very manageable trades. In the beginning, the approach that you take to entries, that mechanical checklist-based approach that reduces opinion, anxiety, take that same approach, right, for your management. Trade 2 contracts. Your initial stop will be 12 ticks. You're going to input that into your ATM strategy. It doesn't mean that you're only going to have 12 ticks of risk on a trade. It means that it's going to give you time to react, to put that stop outside of the window of opportunity. Sometimes it may be 6 ticks. Sometimes it may be 15 ticks, guys, but 12 ticks gives you reaction time. When the market moves in the direction of your trade, you're going to move that stop a tick or two above or below that reversal bar, right? Take profits at $100 on that first contract, guys. Get in, get out fast. Get that dopamine kick. I just won. I feel good. I'm super confident. I'm going to move my stop to break even. I have absolutely nothing to lose, and I'm only going to try to take $200 on the second contract. Guys, you're looking for a $300 trade and only $200 worth of movement. And here's the reality. Before you really learn how to read charts, before you really get good at understanding them, you will have a lot of $100 break-even trades, and that's okay on the entries. But I want you to think about something real quick. If I only take $100 3 times a day, I made $300 a day, guys. Doesn't sound like much until you realize that that's a $1,500 week or a $6,000 month, right? Which puts you at a $72,000 year on 3 trades that didn't work to that second terminate or to that second profit target. The idea isn't to make you a day trader in the first 20 days. The idea is to have you recognizing advantages, to be a chart reader, to be able to hit the entry. And guys, if you allow this to be your path for the first 20 days, and it's hard, I know, you want to be busy. I feel you. I get it. If you allow this to be your path for the first 20 days, you're going to understand how to read your charts and understand fluently where the market is likely to continue. And you'll be able to use that continuation point for your entries. You'll understand where it's likely to stop, and that'll keep you safe, not trading into areas that could stop the market. And it also provides that anchor for that highest probability trend trade. And you're going to begin to understand where the market is likely to go. You're going to recognize that correlation between strong triggers and Fibonacci areas in the distance. But the idea is to build a foundation capable of winning, right? A foundation, a base, something solid that'll carry you to the next level. But it's capable of winning because it's been proven to win more than it loses. Ultimately, guys, your only goal as a day trader should be to make money, period. And if you are truly committed to just wanting to make money, if you want to make a simple $250 to $400 a day per contract, right? This is your highest chance of success, guys. It can be done, and it can be done easily if you keep it simple. And then you'll expand your knowledge. You'll begin to manage more effectively, right? You'll begin to recognize medium probability trades where there's enough advantages to take a trade outside of that high probability trend trade. Your plan may grow should you decide that it needs to. But if you commit to a foundation, I'm telling you guys, I've seen the results, and I beg people every day. Take pictures, post in class, keep it simple. And every day people fight me, and that's okay, right? I'm not your babysitter. I'm the guy teaching you to read indicators. But that's your path, guys. Are there any questions about the high probability trend trade? Are there any questions? When the smalls are above the large, when the large are wide, they're angled in the direction of the trend. Guys, if I circle that tail, see how it pulls back to support inside of favorable large triggers? And if you were in at 94, you took $100 at 96 and then maybe got stopped out break even on that 50-50 trade. There's your first $100 since we were talking, right? And now it's another 50-50 trade, guys. See how price reacts to Fibonacci. It's a very real thing. Guys, I'm going to take a few minutes. I'm going to go reload my water real quick. When I come back, the second half of class, well, the second 2/3 of class, let's get my fractions right, revolve around watching the live market, gauging advantages, determining whether or not you have those advantages if the rules are met for a trade. But more so, it revolves around your pictures. It revolves around your questions. And I'm going to go to the glossary of common terms on my way out here. And I'm going to put this below that picture. It's scary to ask a question that you don't know the answer to, right? What if Mark knows that I'm brand new and that I've never done this and that I'm trying to learn it? Oh my gosh, that'll be so embarrassing. Guys, I have cameras set up all over the continental United States so I can catch you in the grocery store and tell you about that silly question that you asked. I do this. It's what I do. Or maybe I don't, guys. Maybe it's anonymous. Change your name. Do whatever you need to do, but post those darn pictures. Guys, the more pictures you post. I'm back outside of Portland today, Ron. We just spent a day in Washington yesterday looking at where we're going to be living at the end of next month. But I'm back. I'm about an hour south of Portland for the next, what is today, the 23rd? For about the next 35 days, and then it's adventure time again. Life is good, guys. When you make your money day trading, you can do it anywhere in the world. You can do it from a boat, in a train, in a plane. I do, Bobby. I'm up at 4 a.m. every morning. No, it's nice up here. It was ugly and it was ugly in the wintertime. I agree. I don't like the cold. I was bragging to my brother earlier. Oh, I don't have it. Um, this is what John and I do. Just I know we're getting off topic here, but that's okay. That's what John and I do every time there's weather. Whoops, maybe I took the wrong picture. We compare weather. We go through. This is my forecast. What's your forecast? And I'm telling you, during the wintertime, he makes me angry. But now I've got that good weather, so I'm pretty excited about it. Guys, I'm going to leave you with the market. Post your pictures, ask your questions. There's nothing off limits, guys. The only thing off limits in this class, I say nothing and then I say the only thing. Um, Keep politics out and don't ask people about their money. It's none of our business. Feel free to ask them about their trades, but let their private business be private. Guys, I'll be back in about 5 minutes and we will get into that second hour. All right, guys, here we go. What a great example on the S&P here, right? 50-50 trade. I want you to see this. So this is a 50-50 trade. The smalls are through. Is everybody comfortable with this look? The smalls are through, the large are not, right? These are areas with the potential to break but hasn't broken. Guys, if you're going to take a 50-50 trade as a brand new user, your best chance of success, I can't stress this enough, your best chance of success comes from an entry, and let's take this picture. Can you guys hear me? Yep, okay, cool. Thanks, Tony. I want to go through this, guys, because this is the trade that my new users love to lose, all right? This is a 50-50. This means the area has the potential to break, but has not. So what does that mean? That means no clear path. Rule 2 not met. And that's exactly what we're looking at, guys. 50% of your triggers are above, 50% are below. Has nothing to do with your chance of success. Has nothing to do with your odds of winning. 50% are above, 50% are below, guys. The key to this look is odds favorable momentum. So if I have a 50-50 look, I'm going to go to my 5-1. My money is worth a perfect entry. No more forfeiting advantages. That's one of those weirdly spelled words, right? Guys, I should have strong triggers. I should have no divergence. I should have a small window. Guys, this is your best entry for a medium probability trade. An area that hasn't broken yet, no clear path. We're not sacrificing momentum. We're not sacrificing, through a lot of risk. No divergence. Guys, this is your best of the best look. This is a medium probability trade. This is a trade that you're going to have to manage assertively, right? If you get into this trade, you don't manage it like a regular trade. You don't manage it like a high probability trade with such a high probability of going to the next area. You're going to get in, you're going to identify trouble spots, guys. You're going to take quick profits. You're going to get to break even. And notice that on this 50-50 trade, divergence prints, we begin losing momentum, and ultimately this market goes the other direction, guys. You have one shot, really, on a 50-50 of getting that best entry with an opportunity to make some money. So I wanted to share that one with you because that's going to come up a lot. Right back to support. Not a trigger line goes through, guys. We're going from support to a 50-50 to support, and now we're just waiting. What's the market going to do? I don't have odds favorable momentum, right? I have a termination condition below me, but don't I also have a termination condition above me? 90% of what you do throughout the day is going to be sitting on your hands and waiting for advantages, guys. Wait for those advantages to be present. Give yourself the best chance of success. And now let's get into that second hour. Not a lot of pictures posted in class today, but I'm going to go to them. We're going to take a look at them. Gary got us started today. And Gary's just identifying termination conditions, guys. Gary, you're identifying anything can happen triggers on the 5-1 coupled with termination conditions. Guys, this is just a picture that says, hey, my rules aren't met. There's no reason for me to be looking for an entry. Gary also says, look at this. It's a bad top, right? The market's traded into support. None of the trigger lines have broken through. No reason to look for shorts, even with odds favorable momentum. And he's just holding on and he's just waiting. Let's give it a minute. Let's wait for those advantages to be present. Z coming through. Let's see what you did, Z. Z says, oh, I saw this one setting up. Termination conditions up here. There's your full reversal. There's your odds favorable. And Z, it pulls right back to that mid-band inside of favorable large triggers. And you get paid all the way down. And I like this one. You say that you should have exited, right? There's that big blue fib that says, hey, the market may end here. Beautiful trade, Z. Notice that everything is red, guys. Notice that everything says down. Notice the odds favorable momentum. Look at that area inside of favorable large triggers. Guys, every advantage present. And if you didn't take this one, it gave you another shot at getting down to that next area. Z, picture perfect. Not sure that you could have done that one any better. Nice job. And then Jose, 50-50 trade, right? Small's below the large. Large or wide, angled in the direction of the trend. You do have 1, 2, 3 divergences. And then you decide to enter. Jose, you know that divergence highs aren't areas, right? They're just a visual representation of a loss of momentum. In this particular trade, you've got a 50-50 that had already printed 3 divergences. You're doing it at a point where the small triggers are getting above the large. You have a huge split between your large triggers and your synthetic triggers. I'm sure that there was some pattern in your head that made you want to take this trade. But you're kind of picking a pivot stop out in the middle of space, right? I'm not sure how many times this one's going to work. Loss of momentum, loss of a clear path. Does that make sense? I hope that makes sense. And guys, if I point out things that are wrong with your trades, even if it's a winning trade, if I point out the challenges, if I point out where the advantages aren't present, it's not because I'm trying to beat you up. I just want to make sure that you know what you're getting into when you're getting into it. Zeba, I'm sorry you missed a trade. Take a picture of the perfect trade, annotate the chart, put it in the room, and tell me why you missed it. Did you miss it because you overthought it? Did you miss it because you were on a business phone call? And then, guys, this is one of the reminders that I put in the room that I like to say every now and then. Be careful of your language. When I feel like I missed something, my brain says, well, let's make up for what we missed, right? If I exit too early and I say, oh, I exited too early and I didn't make enough money, my brain says, well, you know what? Let's try and make more money. Not, hey, let's follow rules. Guys, there's going to be trades that go without you. There's going to be trades that you're not in front of the screen. Those aren't your trades. Somebody rang the front doorbell. Well, then you didn't miss it, did you, Zeba? It just happened without you. There's a big difference. You weren't even in front of the computer. There was no way for you to miss it. You just weren't there. Embrace that concept. You're just not going to get everything. But it keeps you from feeling like you have to make up for something that you didn't get. I think. I could be wrong. I am a lot. All right, Ron, let's see what you did. Ron says, when everything says up, when the momentum is good, when the triggers are strong, when the path is clear, you took the first one and it didn't, and it got you. What a rare moment. So you let the trouble break and then you get it all back. Nice job, Ron. Great trading. It's weird seeing you only take $40. And guys, the exact same look the other direction, right? Odds favorable momentum, the path is clear. The 13-2 leads the way. The 13.2 has got to lead the way. There's his entry. There's his exit. Guys, can I point something out for those of you that are going to try to do? How did you miss this one, Zeba? What kind of trade did you miss? Did you miss absolutely no areas inside of favorable large triggers? Because it didn't get to the best entry, did it? You did have odds favorable. You hadn't reached a termination condition. But Zeba, do you see how your entry rules? It did what? It did make it to an area inside of favorable large triggers? All right, let's blow it up, Zeba. Tell me if I'm missing something. This is the area inside of favorable large triggers, correct? Resistance, Fibonacci resistance, 1-to-1s inside of the favorable large triggers. Are you talking about, this is Ron's trade. Oh, no, that's okay. This would be your entry right here. No, Ron's entry is down here. Oh, you're taking Ron's trades? No, you've added those? See, I didn't know that. Okay, cool. I'd love to see your rules for that trade. Guys, I love seeing your rules. Your rules make me a better trader. They really do. So Zeba, will you do me a favor? Will you go back? Will you annotate your chart? Tell me what was getting you in here. Just reinforcement. You don't have to. But guys, I think that's important, right? Especially one of the things about this classroom, guys, is it's my job to hold you accountable to your rules. It's one of the reasons that I like you to write your rules on a chart, right? Ron's been posting the same trade for 6 months. I know exactly what gets Ron in the chart. I don't need to see Ron's rules. But if you're brand new, right? Or you're looking to create a new trade for yourself, a new set of entry conditions. If you want help with it, write your rules on the chart. If you don't want help with it, that's totally cool, guys. Don't post it in the room. But I want to be there to help you guys out every opportunity of the way. And then there's Ron's right there, right? And it goes right down to Fibonacci support. And the market bounces all the way up to the midband and resistance. And the large triggers are down and the small triggers are up. And we've got a little bit of indecision in the moment. The large triggers are up. The synthetics are down. In a holding pattern, right? In a holding pattern waiting for advantages. Guys, directly into resistance, absolutely no trigger lines have broken through. In that holding pattern. So while we're in the holding pattern, if you're a high probability trend trader, guys, here's your checklist. Use it, print it out every time you do it. If you're brand new with me, guys, here's that exact same checklist. I'm going to put it in the room for you. Here is the exact same checklist with pictures stolen from the user guide so that you can visually see exactly what it is that you're looking for. Guys, here's an example plan that keeps you focused on absolutely nothing but the high probability trend trade entries, right? And a super mechanical approach. And then one more, because I'm feeling super giving today, right? Guys, here's a simple plan for consistency. When you get those entries in, when you're great with a high probability, when you know what you're looking for and how you're feeling, um, here's that super simple trend trade checklist, super simple mechanical approach to management. And then here is the highest probability 50-50, guys, giving yourself the best chance of success on one of those 50-50s and a management plan to go with it. Guys, this is everything that you need for your first 20 days to be successful. And it's entirely up to you whether or not you choose to commit to it. Let's see what you got, Zeba. Good top. I love it. Odds favorable momentum. I like it. And then you entered late, had to close because the market was going against you. What is CP? I'll probably get it. CP. Odds favorable momentum. Oh, clear path. That makes sense. I'm a little embarrassed I didn't get that. That makes total sense. Odds favorable, clear path. And you're looking for it. So can I give you a little help? I study patterns. This is what I do. And I love this look, and I want to show you something. That one's hard to see. So let's just go back to the market. We'll go to crude oil. And Ron, feel free to correct me if I'm mistaken. So Zeba, when you're looking at this, look, guys, this is a momentum trade. This isn't a trade that I teach, really. But one thing that I do help teach is how to read indicators, right? How to recognize advantages. So let's look at that crude oil. And Zeba, I want you to notice where the bars are in relationship to the small triggers on that 5-1. You've got odds favorable here. This is what we call the momentum phase. When the bars are outside of the small triggers, for the style trade that you're looking for there, this is your best look. When these triggers start to swallow those bars, the momentum is beginning to wane. Does that make sense? And look at that momentum phase. They work inside, and there's your bounce. Must have 20 ticks between fibs, 1-to-1s, etc. All triggers align on both charts. Need good motion, heartbeat, base hit, not home run. Don't get greedy. There you go, Ron. Thank you for sharing that. You don't ever have to share it, but thank you for sharing that. But do you see how that one little piece, though? And guys, this is why I always tell people, trade your trades. Even if your trade is going to be exactly what someone else is doing, make sure that you understand the mechanics of it. Because I can tell you, 90% of the people that I say trying to do what Ron does have absolutely no idea about this look. How come Ron always wins these trades and I always lose them? Because Ron's looking at stuff that you're not. Oh, Bobby T, so close, right? That's a bad top 50-50 on a mid-band 1-to-1s. Just missed you. Because it's no divergence, right? Because it's strong triggers. Stay simple. I love it. Too many charts will screw you up. Amen. Guys, I hate to admit it. I'm just not smart enough for too many charts. What market was that, Bobby? Oh, that was gold. No wonder it didn't look right to me. Bobby, one thing that I would warn you about on this picture, or maybe I'm not even going to warn you about it. That's not what I do. Let's talk about a chart read. Just for grins. Bad top, right? 50-50 at the mid-band. Coming from a solid termination. It's a good looking 50-50. That's your window of opportunity on the 50-50. Nothing over here is too detrimental. Looks like it's coming from a good top. Just when you, and not for the entry, because your entry rules are met, right? Your entry rules were solid. It just didn't get you. On those 50-50s, remember that bad tops are going to decrease it just a little bit. Be vigilant when you're managing those trades. Let me know what happened after. I'm curious to see what happened after. Guys, those are some of the best pictures that you can take. Let's say that you're taking a picture, right? 50-50 trade, something like that. You don't get filled. There's no reason you can't take a picture after and see what the result was without the pressure of a trade, right? Because when I take a picture and the chart is still, guys, I'm an animal. I never lose. Cool. Pop down just didn't get you. Ah, bummer, bummer. That's okay, though. Happens, right? That just wasn't your money. I love that it was a rules-based trade, though. I love that you could put a checklist against it and say, heck yeah, I'm obligated to take this trade because it's in my plan. They're trying, aren't they? They are trying. We'll see what happens, guys. That was a big push down. Support held again. Triggers are rolling. Smalls are trying to get up there. Let's play if then. If the small triggers get above 95. If we get one of those great 50-50 looks with no divergence, small window of opportunity, that may be the first opportunity for longs. If resistance ultimately holds, everything has to roll, right? The triggers have to roll. Things have to start heading down. We need odds favorable momentum. We need a clear path. Guys, what you're doing right now is you have the advantage of Fibonacci. You're looking at two key areas that the market's struggling to get through right now. It's okay to allow it to break, guys. Fibonacci gives you advantages. Know your place in the market. Everybody loves the shark picture, right? Who does what in the market? There's sharks, there's remoras. Typically, I stink at analogies, but this one seems to work, guys. Sharks are the big money investors. Sharks are the guys that create trends. Sharks are the guys that react to Fibonacci. Sharks are the guys that establish momentum. We can be remoras. Is everybody familiar with marine biology? What do remoras do? They just follow sharks around, wait for the sharks to eat a tuna, and then they jump off the shark's back, take a couple scraps, get back in where it's safe, right? Guys, we're remoras. This is what the high probability trend trade is. This guy gets everything in motion. We go make a few $100 and get right back by that dorsal fin and wait for him to create the next mess, right? Termination conditions, guys. We're creating that full reversal. Things are starting to look up, but we still have to clear some paths. Does that make sense to everybody? Guys, the hardest part in your day as a day trader isn't learning the rules. It's not getting the best entries, guys. That's all going to come to you. It's doing nothing when there's nothing to do. The market does not present statistical advantages every second of every day. Your job is to sit on your hands and wait for the absolute best of the best. Your job is to have those advantages in place so that you can have a positive equity curve. But guys, a positive equity curve does not mean 100% winners. It means execution. The process creates the results. Jose, let's see what you got. Got a slow loading chart. Here it comes. There it is. 50-50 trade. Jose, gap theory, right? Got caught up in the moment, forgot about the gap theory. What's the gap theory for you people that are brand new? Guys, if price pulls away from those synthetic triggers too fast and too far into a Fibonacci area, it's typically going to snap back to the area, guys. This gap theory isn't designed to get you into a trade. It's designed to keep you safe. If the market is going up and the large triggers are more than a full bar away, price is likely to close that gap back to the large triggers. Resistance, large triggers are a full bar away, price is likely to close that gap. Jose, what happened to you here is price accelerated so far away from those large triggers, right? We hit mid bands, we hit resistance, the large triggers didn't follow. The market is likely to close that gap, and that's exactly what it did. Your stop was right at that gap close. Does that make sense? And then guys, remember when we talk about favorable large triggers, trending one on top of the other? And Jose, this is a great example of why it's better to have these one on top of the other. Because if price typically pulls back to the large triggers on the 13.2, that's your synthetic triggers. So if they're way down here, and it's likely to happen, it kind of pulls this one out of the equation. Does that make sense? And you said you forgot to check that one. And guys, welcome to Learning to Day Trade. You're going to focus on the best of the best. And as you learn to read your charts, you're going to start adding more, right? Maybe you're adding more charts. Maybe you're adding more rules. Maybe you're putting more on the checklist. The more you give yourself to look at, guys, the more that you've got to come up with. And then Jose, I love it. Termination conditions here, right? Let's give you one more little read, and this will help a little bit. And Jose, this is not a rule. This is not a rule. But when I get a divergence on my 8 range, man, it loves to push back to an HVA. I've noticed this a lot. So if this is my look here, and my HVA coincides with the large triggers down here, that's another reason for me to just kind of chill for a minute. Yeah, divergences on your 8 range typically pull back, but you didn't really need that, right? That gap theory alone, these 2 charts, lets you know that you need just a second. Good stuff. Still in determination conditions here. I told John Novak, it's like the market's kind of stuck right now. It's not doing a lot. He said gold is moving. Guys, you know that the patterns work any time frame, right? Any time frame, any market. It can be Apple stock. It can be Tesla. It can be anything. The patterns are the patterns. It can be gold. It can be NASDAQ. Every market has its own little temperament, though, right? NASDAQ moves absolutely crazy. Gold likes to overrun areas every now and then. And guys, notice how we're just not there, right? Here's your synthetics. Here's your large. No areas inside. That 50-50 is printed, guys. We're just kind of holding, just waiting for that best of the best, waiting for that momentum, waiting for those strong triggers, waiting for that clear path, waiting for the market to give us the statistical advantage. Man, NASDAQ is crazy, isn't it? My brain doesn't work with NASDAQ. So guys, learn the patterns. Know when it's okay to trade. That's the key. Know when it's okay to trade. Know when those advantages are present. While the market figures it out, we're just going to keep going on to it. Heck yeah. I talk about the path a lot, guys. Um, to minimize your learning curve, post your pictures in class, guys. Annotated charts, post them in class. If you win and the rules are wrong, you may have a short-term victory, but a long-term failure. How will you know the difference? To be sure, you need feedback from us, from me. Guys, I'm here to help. 15 hours live every week. Every time you post in the room, it's a private session. My entire focus is your chart. And if I can find things to help you, I'm going to point them out. If I find things that are hurting you, I'm going to point them out. Jose's picture was a great example, right? He had a great termination condition, man, and it caused a full reversal. And he had odds favorable momentum. And we were able to have a short little conversation about the gap theory, about saying, hey, this is where a little bit of patience would have gone a long way. And it doesn't mean that it's a bad trade. It doesn't mean that shame on Jose. But what it does mean is there's something that he can take, that he can annotate, that he can study tomorrow morning and be aware of to make himself a better trader, guys. That's what we do every day. That's part of the magic of what we do. If you place a trade on the simulator, if you participate in class, there is zero risk of loss of capital, guys. You can't go broke on simulator. The only thing you can do is get smarter. You need someone to tell you what you did right or wrong when you're new. Guys, this is part of the magic that we offer new traders. I'm very proud of the educational path that we offer. We lay it out before you. We give you anything and everything that you need to be successful. We tell you how to take advantage of that path. It is your responsibility to be active in your education, right? To post in this room, to ask those questions. Guys, it doesn't even have to be a trade. You can take a picture right now and tell me what you see, and let's have a conversation about it, right? You could scroll back. It doesn't even have to be today. You could open up your chart and crank it all the way back to another day and say, hey, Mark, I noticed that we hit that mid band and the large triggers didn't follow. Am I reading this right? Is that gap theory that you were talking about? And I'll say, absolutely, let's go through it. Let's talk about the look. Let's talk about the conditions. Let's talk about what it means and what the potential expectations are based on that pattern. And you get to get a little bit smarter from only having taken a picture. Use this outline for education, guys. There's no mystery. What do I have to do to get confident? I have to post pictures. I have to use a spreadsheet. Come on, open up picture. That's the slowest picture ever. And so is that one. But that picture is this picture. Your path to success, guys. Follow that path. Embrace it. Every trade you take, use the checklist. Embrace that mechanical approach. Annotate your charts, guys. Get them in the room. Annotate those charts every time. Tell me what you're doing, why you're doing it. Tell me the advantages that were present, or tell me the advantages that were not. Tell me how you felt. I was confident. I was nervous. I couldn't believe I did that trade. That was silly. Silly, silly. Thanks for that, Ron. You know, I didn't either. You guys want to know a true story? I didn't know anything about the markets. I didn't know what a future was. I didn't know trading. Guys, I drove my older brother nuts. He's like, well, yeah, we sell in a downtrend. I'm like, how do you sell something that you don't already have? And I couldn't wrap my head around it. Guys, you don't have to know anything about the markets. You don't have to know anything about futures. Just follow the patterns, right? Create a database. It doesn't make sense, does it, Ziba? How the heck do you sell something that you don't already know? Guys, fill this spreadsheet. Yes, it killed me. And I couldn't let go of it. I mean, seriously, for 2 weeks, it didn't make sense. And now I just don't care. And do you know why I don't care? And that sounds horrible. I care about everything, guys, but Do you know why it doesn't matter? It doesn't matter because when everything says down, when I have an area inside of favorable large triggers, when everything is there, I know that I can make money. So how do I sell it? I don't know. I hit sell and I get paid. It's amazing. Make it easy. Make it easy. Make it easy. And then guys, once you get those entries, once you get that mechanical approach to getting in, you're consistently getting into the market in the right spot. There's that mechanical plan, right? Define your management plan. Initially, that mechanical approach that eliminates emotion or opinion tends to be the most straightforward approach for new users. You can alter your plan when you're done with the education, guys. You can hold for longer moves. You can get out for shorter moves. You can get in with different conditions. But get through the education. Allow yourself a minimum of 30 to 90 days, keeping it mechanical, right? And that's it, Rain. You're not selling something. There's two sides to every trade, right? There's a buy and there's a sell. So for every action, there's an equal opposite reaction. And exactly. And if you use that word shorting, I'm shorting the market and then going long gets me out, or I'm going long in the market and getting short gets me out. And that's what wrapped my brain around it a little bit, is I had to get rid of that word sell the way you did, Rain. Yeah. You don't own the future anyway. It's just that little transaction right in the middle. Guys, keep it mechanical on your entries. Keep it mechanical on your exits. Give it 90 days. Get good at this stuff before you branch out. Take up as much time in this classroom as you need to take up, right? Post every picture that you can. D, let's see what you did, my friend. And I'm going to open it up and we're going to take a look. All right, D. Odds favorable momentum. I love that you have the question mark. It is, isn't it, Debbie? D said, not odds favorable momentum. D said, odds favorable momentum? Was that right? Is that my good voice? What's odds favorable momentum, D? That's it, right? Smalls below the larger wide, they're angled in the direction of the trend. Can we agree that this look absolutely positively matches this look? Rule number one met, wouldn't you say? And now let's look at the next part of it. I can't tell. Did price reach that fib at 38.50? 52.28, 52.28. So we reached 53. Your small triggers went through, right, D? So you've got, it's okay. No, yeah. So, but thank you for that. Thank you for sharing a mistake. It's a 50-50, right? Smalls below, large above. One-to-ones haven't broken. Neither have the that support. It's a 50-50. You do have odds favorable momentum. You're not coming from a good top. 50-50. And then let's look at your entry. No divergence. And I like that. There's no divergence. And you know what, D? The only thing on this trade that really stands out to me, and I like how you annotated it, because this is why we annotate charts. D, you said midband, right? But did you notice that you didn't put area inside of favorable large triggers? Why? Because if all you put is midband, you're telling yourself that this trade's okay. Well, I'm trading from the mid-band. And D, if these are up and these are down and that's not inside of them, do you see how difficult it is to say that this is the area where the market's most likely to continue? And I'm glad that you got paid on this one. That's tough, isn't it? So you gave away the advantage of momentum, but you are not the advantage of momentum. You gave away the advantage of a clear path. Yeah. So let's go to entries and let's just look at them. What's rule number 3 say? Guys, this is why when I say that annotating your charts is imperative, odds favorable momentum is rule number 1. No termination conditions is rule number 3. Area inside of favorable large triggers, rule number 3. Absolutely. Oops, sorry, number 2. Area inside of favorable large triggers. And guys, and this is why I always say embrace the language. Because what are your areas? Mid-bands, fibs, or 1-to-1s. So D, you nailed it. You had an area, but it wasn't inside of those favorable large triggers. And that's what hurts you there. Because you remember the gap theory that we talked about, how price likes to pull back to the large triggers? Guys, that gap theory is what gives us that great entry. It's that pull back to the area inside of favorable large triggers. And look how it pulled right back to those large triggers. And D, this is a little weird looking. Oh, that's the NASDAQ. So you're trading a 13.2 on the NASDAQ and you're trading an 8.2 on the NASDAQ. Just throwing it out there, D. The workspace for a NASDAQ as provided by Nexgen is 34.5, 13.2. There's not enough space in between these two, between the 13.2 and the 5.1, for a tremendous amount of clarity. And what you'll notice on the NASDAQ is all of this happened on a 13.2, guys, in under 2 minutes. It moves a lot. Yeah, I think you can go to the resource pages right here. And if I'm not mistaken, if you run those indicators, save your old workspaces that you like to use off in a different folder. But if you download the indicators, you can do it, or you can just change that 8.2 to a 34.5. Because one of the characteristics of the NASDAQ is that it moves a lot and it moves fast. So when you get that movement, you can slow it down with that higher time frame and look for opportunities on the 13.2. But remember that the look isn't going to be exactly the same. It's like a river in Austin, Texas. Fast. Guys, look at that termination condition holding. Do you see how you've identified consolidation in the market? Termination to 50-50 that doesn't work, to termination, and now it's pushing down. Guys, you have such an advantage being on board with Nexgen. You know exactly where the market needs to get through to have a clear path, right? You can see it, it's visual. And it's easy to say to yourself, no trades until I break below here or break above here, because I'm not going to try to fight the sharks. Man, the sharks are fighting the sellers to the buyers, to the sellers, to the buyers, to the sellers. Let them work it out. Let them figure out what they're going to do. Guys, you don't have to predict. You don't have to hope. You don't have to do anything other than wait for your rules to be met. Crude oil. Support to the mid-band, gap theory, back to support, and now we're waiting to see. Is this really going to be a good bottom, or are the triggers going to break through? 90% of what you do during the day is sitting on your hands doing nothing, guys. 90%. It can be frustrating. It can be aggravating. It can be boring. But guys, waiting for those advantages creates a very distinct opportunity for success. Um, Embrace that. Remember, the only reason you're here is to make money. Give yourself the best chance to make money. Guys, I'm going to take a few minutes. We already made it to the 11 o'clock hour. That's impressive. We're cruising right along. When I come into this final hour, do me a favor. If you're brand new, make up a question if you have to. Let's get something to talk about, guys. You lead the way. I'll be back in about 5 minutes or so. When I come back, who knows? Maybe we'll have broken out of a range. We can leave it on the S&P. Maybe we will have broken out of a range. Let's wait for 100% agreement. And then when I get back, we will get into that last hour and answer any and every question you guys have. Back in a few, guys. All right, guys, here we go. Last hour. Gary, that's why I don't live in Argentina. Holy smokes, 109%. That's a lot of inflation. All right, guys, they're still fighting, aren't they? Man, nothing to do. As we come into crude oil, from a termination condition to a termination condition, there's that gap theory back to support. 3 divergences coming from that support area, right? If this is really going to be a bottom, if this is going to be the low for the day, all these triggers are going to roll, guys. They're going to give you that best chance. You guys want to learn how to build a workspace for a new market? You want to see what gold is doing? Have you guys ever done this before? This is the NinjaTrader 7 one, where you can go File, New, Workspaces. Yeah, let's do a new workspace, guys. Notice how it gets rid of everything. We have to build charts in new workspaces. So I'm going to go New Chart, and I happen to have gold in here. And I'm going to build a Nexgen dynamic Renko chart, right? What's our large chart? 13.2. Whoops, and it looks like I just got bumped out of class. Let me get back into class. I apologize for that. It happens sometimes. Back into the education room. Whoops, where'd my education room go? There it is. Got my pop out. Let's get that screen back up. And there's that screen, and I should be back, guys. We're going to go File, New Chart. Let's build a gold chart. 13.2, only need 10 days back, right? Have to put a template on it. 13.2 Renko. I'm going to click OK. And it's going to build a 13.2 chart for me, guys. And we're going to take a look, and we're going to look at another market because what we teach works on any market, any time frame. I don't have stock data, but if we wanted to build a Tesla chart, we could. Guys, there's a 13.2. We're halfway there. Now I just need a 5.1. So I'm going to go New Chart, right? Gold again. And let's build that 5.1 chart. Let's do that refinement chart, that entry chart. Once again, only 10 days back, guys. There's so much tick data going on in today's markets. We're good. We're going to build that 5.1 Renko chart. Click OK, and it's going to come through one more time. Remember, patterns are the patterns, guys. The rules are the rules. Some of you are going to look for different markets. Totally cool. What do we see right now? Smalls below the large, right? We have one of those 50-50s right at 1-to-1s. But I also have 3 divergences in the same location, don't I? Feels to me like we're forfeiting advantages a little bit. And then Bobby, you watch gold. Did we catch this one? 50-50 on those 1-to-1s, smalls below the large, no divergence, right back to the mid band. Finishes the move all the way down to the 1-to-1s. Guys, look at that odds favorable momentum. There's my circle. There's one of those 50-50 trades, right? Smalls above the large are wide, they're angled in the direction of the trend. What did that look like? Big split triggers, right? Not the best look. I haven't looked at gold in a long time, guys. Termination condition, right? Creates a full reversal. Look how that market rockets up. Everything is patterns, guys, and it looks like even gold has been having some indecision today. Can't make it, 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 and just waiting for the breakout, right? Ultimately, it breaks to the downside, right to support. Bunch of holding patterns going on in the market, guys. There's that termination creating a full reversal. There's that full reversal trying to give me odds favorable momentum. 3 divergences helped define it, didn't it? No triggers through support helped define it. Getting close to one of those 50-50 scenarios. Hurry up and wait. What do you guys want to talk about? I can go mic silence if you want. I can just be quiet. We can watch the markets. Wait for advantages. Guys, there's some days where it's better to go walking on the beach. Go swing your golf clubs. Some days the market's like an ATM, giving advantages and money at every twist and turn. Some days there's indecision. You're in an uptrend with red large triggers, right? Rules haven't been met, Ron. Dab chain, I'm not sure. Your best bet to get that question answered is head over to the traders chat section. There's a lot of people over there using it. There's a link to the traders chat. Yeah, you'll probably get everything that you need. Daniel, Daniel, are you on 8 or are you on 7? So I would let's use the internet. I don't have a link, but we'll find it. Let's see if we can find their calendar. I know that they changed them a little bit. Yeah, they did. When they did all the updating, so here is your S&P contracts. And then you can just Google. That's probably going to be the best one. So crude oil, Daniel, 17th of every month or the 15th of every month, you're looking at that roll. And then the S&P is going to roll quarterly. That's the general rule of thumb. And then Jim H., is there a termination ahead? How much room do you need to say no termination? Jim H., what a great question. Are you ready for the easy answer? And this actually becomes a pretty common question. I made a picture for it and put it in my spreadsheet. So the difference between a termination and a target, Jim H., and that's basically what we're looking at here. In order to decide if an area is a target or a termination, right? A termination means that price reaches the area, and that's this first one. Price reaches the area, absolutely no trigger lines break. It's a termination condition, and it's in that key phrase. Price reaches the area. Jim H., for me, 1 tick. If I'm 1 tick off of the area, I'm probably going to consider it a termination. And then the flip side of that is as you're approaching Fibonacci, this for me is a target. This is an opportunity. This is giving me some place to hopefully trade to. So when I look at entries, and I'll find a picture of one for you real quick. And this picture is a great example. I've got about 4 or 5 ticks, right? Before we get into that trouble area. And even here, you're like, oh man, we're getting close, right? So Jim, because price hasn't reached the area, we don't consider it a termination condition yet. And because we're buying a pullback at an area inside of favorable large triggers, that couple ticks turns into darn near 2025. Does that make sense? So if I haven't reached the area yet, it's not a termination condition. I consider it a target. Once price reaches that area, and absolutely one tick off, I'll have to look at my conditions, but more often than not, one tick off, I'm considering that area reached because of how fibs are put together. But if it hasn't been reached, I consider it a target. And for those of you that don't know how fibs come to be, let me show you something. And this is why, Jim, one tick off, I err to the side of caution. When you guys open up your software, it's running projections and retracements on every pivot in the market, every swing over that 10-day back period. It's creating synthetic time frames, and it's going through and it's doing thousands of calculations and measurements. And then what it does is it sorts them out and it weighs them out. So before your chart looks as pretty as it does, these are all the calculations. These are all of the areas, all of the retracements, all of the projections. And then your software does that sorting. And that's how you end up with those pretty red and blue lines. So one tick off, I'm willing to say that for all intents and purposes, we're there. But 4 or 5 ticks off, I'm very comfortable taking the trade and treating it as a target. Notice how nothing agrees here, guys. Great question, Jim. Thank you for asking that. Just waiting for agreement, right? Crude or the S&P says sit on your hands. Gold says the area ultimately breaks, and we're back to that next area. And then there's that termination condition. So this is a good one, guys. Price reaches the line. On its own, this is just a pivot with a loss of momentum. But when price reaches it to the tick, this is why it made the list. None of the trigger lines broke through. Guys, that's a termination condition. Some of you tried to enter at the mid-band saying, look, it's a 50-50. The smalls are up, but the large aren't through. But guys, it went smack into a divergence high. Absolutely no trigger lines break through. It is a termination condition. Does that make sense? Just a pivot with a loss of momentum. 100% textbook termination. Guys, you're watching a fight between buyers and sellers right now. Your rule number 2 just kept you out of a loser. So here's the question, and I know you guys love it when I put you on the spot. Who went long here? The blue fib, it's not support, meaning it's going to bounce up. D, it turned blue because of the price action and everything and where the triggers are. And D, I'm so glad that you said that. Is there any place in your rules that describe the color of a fib? You guys remember simplicity? And I think that what you just said is a perfect example of how our brains try to create rules to get us into trades. There is nothing. Okay. Support blue, red. Here's your rules. You need strong triggers, right? I love it. Strong triggers. And you need no termination conditions. Identifying the color of the fib. Price trades up to resistance. Price trades down to support. So absolutely, blue support, red resistance. But whether or not support is likely to hold or break, D, is determined by trigger lines, right? It's determined by where those trigger lines are in relationship to the area. So even though that's blue, we had just traded into a termination condition. And we had also traded, I don't think so. Watch this, are you ready? I'm going to show you something here. D, are we trading into resistance or support here? This was the exercise that was done to me that helped. Trading into resistance, right? The market's trading up into it. Trading up into resistance. It's still yellow. All the trigger lines broke. Resistance is behaving as support, no matter what color it is. And this is you training your brain a little bit. And if we scroll back and look, what's the one thing that you can notice here? Is price breaks and you can't get all the triggers above, right? The triggers remain below, can't get all the triggers above. The triggers are straddling. No matter what color this line is, D, you don't have the advantage of a clear path on it. Pretty cool, right? Man, simplicity. I love simplicity. Not gonna lie, guys. The easier you allow it to be, D, that's one thing that you don't have to think about anymore when you're looking for a trade, right? You don't have to put that into your equation. You can keep it odds favorable, no terminations, in an area for entry inside of favorable large triggers. Absolutely. Nexgen Ben, that was his phrase. I love this question, Dab Chain. General thoughts on this. Let's read what you wrote. Is this one to consider and where is the entry? Losing momentum, but still pretty strong through the fibs and one-to-ones. Favorable large, just barely. No strong top, pounding through fib lines. So, Dab Chain, what you're asking me is how do I break my rules, right? When I want to be in a trade, when I think I have a clear path, yeah, no, you are. It's okay. Everybody does. Let's do this. Do you have the advantage of momentum? Not at all, right? Smalls inside the large, anything can happen. Smalls inside the large, anything can happen. Absolutely. Just boom, that advantage of momentum is gone. Cool with that? That's my first general thought, is I'm trading without momentum, which means that everything else better be just rock star solid, right? If I'm going to risk my money. I do have a clear path. You're absolutely right there, man. I've got small and large through the area, supports beginning to act as resistance. I've got one piece of the puzzle. So if we're putting it to a vote, I don't have momentum, but I do have a clear path. So my requirement is that this entry area is phenomenal. It's not. My triggers are split. And let me show you why this is a look that's too hard to decide on. Let's go from the bottom of your triggers to the top of your triggers. from the lowest point of resistance to the highest point of resistance. So there's your window. $100, right? And it still went up to here. So for me, I'm not even close to rule number 3 on this one. I don't have an area inside of favorable large triggers. And to be honest with you, Dab, if I had weak triggers and a clear path, and I was pulling back to a stacked area with everything below it, maybe one shot, right? See how this one, everything was down? And it pulls right back to those 1-to-1s and gives me a pivot stop out right at a key area with every trigger below. Maybe right here. But at this point, man, it is so wonky, and there's nothing here to support that trade. Yeah, I'm inclined to just sit on my hands and wait for the best. You went in at the third arrow for about 6 ticks. Right on. Let these small triggers roll. So here's a thought. When you talk about entries, your rules have to follow the trend. So check this out, Dab. When things aren't perfect, but the 13-2 still says go, let every trigger roll and agree with the trade, and then look for a stab back to an area at the small triggers. This is what we call a continuation. Sometimes perfect trend trades don't work. Sometimes areas get overrun. Here's another example. This trend trade doesn't work. Comes down, we don't know where it's going to go, but ultimately every trigger line agrees again. So if you're looking at your picture, Dab, you can say to yourself, I don't know where it's going. I'm just not sure. So I'm going to wait for everything to agree with the trade down again, to go with that trend, to go with that clear path. And typically you'll get like this little move and then a stab back to maybe 20, 18 to 20, where the small triggers have rolled. And that creates an opportunity. And it also creates an amazing patience piece. Because you can say, well, it's not perfect anymore. I'm going to let my fastest momentum indicator get in favor of the trade. And there's an opportunity right there, right? See how it happens? That stab back right to the small triggers, right at resistance. So I hope that helped a little bit. That was a great question. Hey, Mark, how do I break my rules? Well, you don't. And then you look for a way. Upside down triggers. Paul says, not only am I going to give away the advantage of momentum, I'm also going to give away the advantage of trend, trading with the trend. Even with a perfect bottom end, even with wonky triggers. Paul. That was on Sim. Learning how to break your rules efficiently. That was not a good trade. Guys, there's better lessons, and Paul, I'm not picking on you here. You know it's a better lesson than taking this trade and getting lucky? Not doing a darn thing when your rules aren't met. Man, that's what you want to reinforce. You don't want to reinforce that it's okay to get lucky when you're bored, right? Guys, and this is why we always say, don't practice the wrong trades. I can't tell you what to do. I don't have any desire to tell you what to do. But what you're doing here is you're telling your brain, hey, even though stuff looks horrible, I can still make money. And I can hope that that works every time. Good morning, George. Let's see what you got, my friend. All right, George. So one thing that I notice here, and maybe you're Paul's alter ego. The first thing and the most important thing is I have to ask why you have market flow bars on the 5-1. Maybe there's a reason for it. But more importantly, and guys, I go back to this every day. If you're brand new in here, if I've never looked at your charts and we've never had a conversation, You telling me why you did what you did. George, why did you go short there? What got you in? In order for me to give you the best feedback, in order for me to take your read, to talk about it, to gauge what you're seeing, what you're thinking, I need you to annotate your charts. Because what I see, and George, you've probably been around a while, you have MACDs here, right? So even with MACDs, you can see that they're trending up, right? The market's losing momentum to the downside. We're in an uptrend. The smalls are on the wrong side of the large. And you went short. I'm not sure why. Because of a midband? So we fought trend. We didn't have momentum, right? Guys, if you ever wondered how these divergences print, see how these MACD BBs are trending up, right? That's just a little indicator there. So George, thank you for sharing. I really do appreciate it. But you're fighting trend. You don't have momentum. I'm not sure what got you in. Write rules, guys. Write your rules on the charts. Let me help you. Can't stress that enough. Help me help you. How we doing today? We're working that patience bone, aren't we? Paul's trade was part of the advanced chart reading material. It says the triggers say one more down. Which triggers, Paul? Or Rain, I'm sorry. Which triggers say one more push down? And let me show you, and I think that this is a misunderstanding of a concept, and that's okay. These triggers say one more push down, right? Odds favorable momentum. And let me see if I can find an example of it. When you go screaming into an area, that's at 3:57 a.m. Let's see if it gave us an example here. And Rain, I'm thankful that you posted that. And this is one of the reasons why I think it's important to attend this class, right? So check it out. And I'm glad that I found an example. Rain, this look right here, because of the odds favorable momentum, right? Because everything is screaming down. If there were support right here, odds favorable momentum says that the market is likely to come back and retest, right? There's so much behind that market that it makes sense that there may be another push to the area. As we come back here, all of that odds favorable momentum, it suggests that there may be some sort of bounce, some sort of reaction to get back to that area. And this is why I'm not a huge fan of the advanced chart reading available to new people, because it confuses concepts. But when you're fighting the trend, you don't have momentum, there's less of a chance to get that next push down, if that makes sense. And Rain, I love that you posted that, right? I appreciate that you said that. But you've got a better chance for a retest, and it looks like we had one here. Maybe not. Didn't even get one here because of those weaker. Does that make sense, Rain? And you're saying show his picture, please? I absolutely will. And guys, know that it's never an argument. It's always a conversation. So Rain, if we isolate it a little bit, there's nothing that suggests that market's going to push back down, right? The small had already gone. Awesome, Conrad. Too many mind. Does that make sense? And I'll do that, Rain. When I'm talking about that potential for a next push, odds favorable momentum always has to lead the way. I watch Nexgen users all the time taking trades in determination conditions when the market is screaming. No problem. Odds favorable momentum, guys. It leads the way. And you guys realize that you can never be wrong in this class. It's impossible. You can't be wrong. Sometimes things have to be said a different way. That's okay. But you can't be wrong because you're learning. It's an educational process. Guys, look at this. 1, 2, 3 divergences from the same general price range. Small triggers have worked to the other side of the large. Do we recognize this pattern? Still have to clear an area, but shorts at this point, I would say financial suicide is the phrase that comes to mind. Conrad, it can be easy, can't it? It can be simple. Don't use John Novak's Formula One charts on your scooter. I love it. Oh, that's going to be the new thing. John Novak's Formula One charts, guys. If you're used to go-karts, let it be simple. What does being simple mean? It means that you have to sit on your hands, guys. You just have to wait. Wait for those advantages. They're coming. They always do. No momentum at support, at a pivot stop out, multiple divergences, trend changes. Guys, there's no more shorts. The advantages are gone. Support holds, higher divergence, and there's those damn fibs. Guys, today has been nothing but patience. Nothing but patience. Dab chain, are you still with me? When everything starts to say up, guys, check it out. It pulls back right off that termination. If you felt like you were going to take a shot at this trade, look at that right there, Dab. That's where every trigger agrees. That's your, see how it keeps you out of all the nonsense? And you just say, man, everything says up, support held, this says up, these say up, triggers say up, areas say up, everything says up. I'm going to wait for everything to agree. No, and D, there wasn't a high probability trend trade there. Not a rules-based one. Waiting professionally. I love it, Ziba. You should coin that phrase, waiting professionally. What does that mean? It means that I take my job serious, right? That I'm going to wait for those advantages until they're present. And until they're present, I'm just going to sit on my butt, guys. I have a sketch pad in front of me. I like to draw. So when there's nothing to do, I draw. Sometimes I pull my iPad out and I draw. I know that I've talked to people that will play reggae music. You know, they're like, oh man, I find it really relaxing. Some people play video games on their phone, right? Shogun has a crystal ball. He knows exactly what the market's going to do and when. Do I need to go back to that Magic 8-Ball app? Were you guys here the day I did that? It was funny. How much you want to bet, Paul? Round of golf? Round of golf? Let's see. Let's type our question, guys. Will the ES go up? Because this is all we're doing, isn't it? We're just guessing. Let's leave it to the 8-ball. Shake the 8-ball. 8-ball says yes, Paul. It agrees with you. If that's not solid chart reading, I don't know what is. What about this termination condition? How do we feel about it? Oh, small's below, large below. Whew, man, I'm going to wait for a clear path. Look at that. Pivot, stop out, at support, full reversal. Just got to clear a path, man. We'll see if gold wants to work its way up. Crude's still trying to work its way up. Was there some good news in the market somewhere? Everything's leaning up, guys, but I'm still waiting for rules to be met. As of now, the termination condition is holding. Let's see if the sellers have one more fight in them. What's the day look like? That's a lot of down today. The buyers took control to that key area. There's your termination condition. Market comes down, a bad bottom, straight to the mid-band. Gap theory to support. Support to resistance, to support to resistance, to not quite support, to that pivot stop out. Paul, what do you think, man? I love it. OPEC, don't short oil. Divergences. Day Russell. No, doesn't work that way, Paul. Pinieski. Here's a pivot stop out. You think it's going to create a pivot stop out? You coined it. Guys, I don't care what the Russell's doing. Respectfully, Conrad. D, I don't care what OPEC says about the oil. Those are opinions. I want rules met, right? I want rules met. And if I don't have rules met, I'm not taking a trade. I don't care what the Russell says. Doesn't matter what OPEC is saying. I don't care what the Fed say. If my grandma calls and says, hey, guess what? You need to go long in the S&P, I'm going to do it because, you know, we love Nana. But anyone else, doesn't matter. Guys, just wait for your rules to be met. And sometimes your rules are going to correspond with the news release, and sometimes they're not. So why not just wait for the rules to be met? Makes life easy, guys. Pick a few minutes after the trade, going to 8 ticks, was on way to 1967. It was a good year. What market are we looking at here? Is that gold? That's crude. So termination condition with weak triggers, 100%, right? And 2 losses of momentum at a termination condition with weak triggers. That's not gold. 1967. That can't be crude. That's got to be gold. Yeah. So termination condition, weak triggers, giving away the advantage of momentum, giving away the advantage of a clear path. 2 losses of momentum on a 5-1. Dab, sometimes you have to say to yourself, I don't care that there's an area inside of large triggers. I don't care because my 13.2 doesn't say it's time to look for it. Does that make sense? You know what's hard to do, especially when you've been bored? Is when this says no, stop looking right. Just say it. Just say no trade. That's it. Everything starts with the 13.2. I had a conversation with somebody once, and it was a pretty good conversation. I said, what if all you did, what do you guys think? What if all you did was open up your 13.2 and wait for the rules to be met before you ever looked at the 5-1? Do you think it would help you be patient? I don't know. It may not. But if the 13.2 leads the way, if the rules have to be met on the 13.2, doesn't it make sense to focus your attention where the attention needs to be focused? I think it does. Man, Paul, I don't know if you should have backed out of that bet, man. You were looking pretty good there. Isn't it easy to second guess yourself though? That's smart, Shogun. I love it. Separate screen. All right, guys, there's nothing to do. So what I'm going to do is I'm going to share, yeah, when they're all, man, when they all agree, doesn't it just get easy? Cameron, why are you day trading? All the big boys, OPEC, etc., were saying no more shorts. So, Shogun, was that you or was that D? Who said that? OPEC said don't short? Guys, Nexgen had a big blue line there, right? Just read your charts. Just read your charts. If you build an opinion it can't go lower, there's no way it hasn't gone this low in 15 years. Well, you miss opportunities. Follow your rules. Crude hadn't hit this low in 15 years? That's not true, Cameron. Crude oil hit zero a couple years ago. Lies and garbage. Crude oil hit zero. Was 2016 15 years ago? Hey guys, don't trust. Oh, this was 2016. Dagnabbit. All right. Man, I just wanted to pick on you a little bit, Cam. If you're going to bring logic and facts into this conversation, are you saying that in 2016 the Nexgen rules worked? Multiple time frame resistance held, reversed the market, sent it all the way to support, at which point support held and gave a trend trade to go back up to resistance? Cameron, I'm buying you a beer next time I see you. I apologize. Yeah, 2020, it was less than zero, right? I didn't realize this was 2016. I didn't read the whole chart. But isn't that cool? Big blue line, guys, right at the low. Welcome to Nexgen. All right. So, guys, in a different life, I used to road race motorcycles. And there was a coach from the California Superbike School. His name was Keith Code. And Keith Code used to say, approach racing motorcycles like you have $10 worth of attention. Whoops. You have $10 to spend on your trade, guys. In the beginning, odds favorable momentum is going to take up $3 of your attention because you're just making sure that it's right. Termination conditions are going to take up $3 of your attention. Guys, entries are going to take up $4 of your attention. This is why simplicity yields results. Because you're spread thin trying to figure out these basic rules. You're spread thin trying to make sure that your checklist is met, right? But here's the good news. By the end of the first week, you're spending $1 to recognize that odds favorable momentum. You embrace the path of termination conditions and that recipe so much that you're only spending $2 there, guys. And you're going to keep that $4 looking for the best of the best entry. But now you have $3 to recognize other patterns, right? You have $3 to start looking at these patterns and how they react. And eventually it goes down more and more. And it's like when you're learning to drive a car. You have only so much attention, guys. When you're 16 and you're taking your first road trip, you don't remember what was on the radio. You don't remember the buildings that you passed. All you know is that you had to focus to get from point A to B, guys. That's your high probability trend trade. But now you can cruise down the road and you don't remember the drive. You remember everything else, right? Because you know what you're doing. Slow days still pay? They can. That's still not a bad day, right? And Dab, can I say real quick, guys, one thing that Dab Chain said is I have to trade with the trend. You said that earlier today. I have to trade with the trend. I have to have the advantage of the trend if I'm going to take a trade. Pretty awesome, right? They're trying, Paul. You're going to have regrets. We could have been playing, but you backed out. I was thinking Pebble Beach too, so bummer. But do you see how easy it was to second guess? Paul, you were convinced that these were going to break, and it took one little iota of doubt to get you to change your tune, didn't it? That was a sneaky lesson. Guys, this is where trust comes in. What does 3 divergences in the same price range mean? It means that the trend may end, right? What's it mean on a higher time frame? Watch this. And it's only because I'm intimately familiar. Any 3 divergences in the same general area can cause major reversals. Expect larger moves after termination conditions like this, 3 of them. It's got some work to get through it without a doubt, but all the indications are that this market's likely to go up. It just has some work to do. But 3 divergences, smalls above the large, every indicator on every chart agrees for this market to go up. And once we clear that area, well, now we have a better chance. Paul, I was with you 100%. I just like to play devil's advocate. But this is a great example, guys. Opinions don't make great traders. Rules make great traders. Consistency makes great traders. I'll still buy you a round of golf, Paul. You just got to come to me. And speaking of, it is going to be beautiful and a little sunshiny today. I'm going to go swing some clubs. I'm going to look for high probability trend trades for a couple hours. I'm going to see if 97 breaks, and I'm going to take advantage of it if it does. Guys, that's it for me. Great class. I appreciate you being here. Those of you that are new and participating, thank you so much. Those of you that are old and participating, thank you so much. The more you bring to this class, guys, the better this class gets. It's always changing. You lead the way. And I will be back tomorrow morning.